everyone to MEDICI Studio. This is Aditya Krujekar of MEDICI. I'm here with my co-host, Amit Goyal. Amit is in Bangalore, I'm in Princeton, New Jersey, and we are really excited to have Jason Gardner of Marqeta from Oakland, California, as our first guest. So on the one hand, I'm so excited to welcome Jason here. And Jason, thank you for taking the time early morning in California. And thank you to all of us in the audience, all of you in the audience. So on the one hand, I'm really excited that we can do this. Obviously, big news for Marqeta from last week. On the other hand, it is also a very somber time. It is something on my mind, what is happening in the country, in the world, the protests, the pandemic, so many things are happening around us that are clearly on our minds. And I want to start with that, Jason. I know we are here to talk about FinTech, we are here to talk about Marqeta, but I just want to also address what we see around us in our communities and our country. Jason, would you like to share any thoughts on that as we get going?
Yeah, I appreciate that, and thank you for having me. I thought, I wrote an email to the company that I want to read to the audience, which I feel encapsulates not only who I am as a person, however, how I feel about what's going on in the country today. It certainly represents not only myself and my team, but the people, everyone at Marqeta, including our customers. Minneapolis, a South Georgia neighborhood, Sanford, and so many other cities and towns have witnessed the violence and death against African-American men. Sadly, this isn't a rare moment in time. Hatred and violence, institutionalized amongst the few, always turns its ugliness into action. This has been an incredibly challenging week for our African-American community. I know how upset you must be. This has been very upsetting for me personally. At Marqeta, we believe in equality and justice. We stand with the African-American community now more than ever. I care about this company and its people. I care that you walk through the door every day feeling like you belong, that you want to make a difference for each other and our customers, not just for Marqeta, for other human beings who work here, for other human beings in your cities and towns, countries and states, neighbors and roommates. Justice starts with how you show up, like you belong to something greater than yourself. I encourage you to make a difference and stand up for what's right in the best possible way, as you see fit and peaceful. I have faith that love conquers all.
Jason, thank you for sharing that. I really appreciate it. I can only be inspired by how you have shown leadership, not just today, this week, but I have seen you from afar for the last 10 years, almost, since we first met in 2012. And it's always been very inspiring, even the brief interactions that we've had. So thank you for sharing that, and thank you again for being here, Jason.
No, I appreciate that. Everyone who knows me knows that I care about other human beings. That's how companies get built. It's how ideas can come up, and how you treat people is truly what you'll be known for. And for me, that's incredibly important. It's incredibly important in a pandemic. It's incredibly important for the people at Marqeta and our customers. It's incredibly important for what's going on in the African American community today and what's going on around this country. So first and foremost, this is all about people and how you treat them. And I want to make sure that the people in the audience know how I feel and who I am as a person, separate from the accomplishments that I've had.
Thank you. We do have a few different audiences here today. We have people here who are participating in Zoom. This is also being live cast on YouTube, Twitter, Periscope, and LinkedIn. And we will also be publishing this tomorrow after the Blackout Tuesday that we are all going to respect, given everything that's going on. Jason, let me just start with the first obvious question, right? This is our FinTech Is Hard series. I couldn't have thought of anybody better than you to kick this series off. Firstly, do you agree with me that fintech is hard, or for you, is this like, yeah, yet another company, yet another 10 years, I could do it in my sleep? Is fintech really hard?
Tech is really hard. I think today it's less hard. And this is my second fintech company. I co-founded a company named Property Bridge back in 2004. We sold that back in 2007 to MoneyGram International. I was on contract there for a couple of years, and then founded Marqeta by myself. 5 or 10 years ago, nobody was investing in fintech. There was this general assumption that the large financial institutions, the large banks, not only here in the U.S. but around the world, were frankly impossible to compete against. Based on their size, capital, know-how, resources, et cetera. So, starting in the very early days around fintech, which wasn't even a thing, getting the attention of not only capital, but partners and friends and associates and employees was really tough. So it was very hard 10 years ago. It's still hard. It's just less hard today.
And what is specifically hard about the company that you chose to build? Because you've done this before, you've had an exit before. I know fintech wasn't a thing then, I agree. But what was your primary motivation to do what you chose to do when you started Marqeta?
Well, being an entrepreneur is it's like being struck by lightning. It's not you find an idea. It's kind of an idea finds you. And once that idea finds you, you really know what you want to do. And it needs to come from the heart, not the head. You need to feel very strong and have conviction, because you know what it's going to do to you. I mean, it's physically and mentally taxing. It puts stress on your relationships, whether it's your spouse or partner or kids, family, friends, etc. It's tough starting businesses. It's tough, convincing people to leave good paying jobs to join you on a journey when you have nothing. It's difficult to convince people to part with their money when you just have a spark of an idea. You almost have to have fire coming out of your eyeballs and have such conviction that that it's fait accompli, that the train has left the station. So in the early days, you have conviction around the idea. I knew back then that this idea that a friend gave me, Suki Singh, he and I were having sushi at a restaurant in San Francisco. He said, "Hey, you're a payment nerd. Try to put a bunch of Groupons on a card." And I wanted to go solve that problem. I knew nothing about issuing and processing. There's thousands of acquirers around the world in sort of the payment card industry. You could probably, at the time, 10 years ago, it's less than 10 issuer processors, and we knew we had to build one from scratch. I think you're talking about hard in the beginning. A lot of people tell you that a lot of other people have tried to create issuer processors from scratch, solving this problem, and they haven't been able to do it. So why you? For me, that's a big motivation. Getting no, or people telling me that I can't do something is incredibly motivating for me. Whether I was 5 years old or 25 years old, when people told me that I couldn't do something, it really motivated me to go solve that problem, either mentally or physically. So it's a big driver for me to solve these big complex problems.
Right. So Jason, basically, I think I met you first time in 2015. Aditya and me visited your office in Emeryville. And I still remember that it took me a while to sort of understand the proposition that you had, because you said something like, we are kind of, building a card issuing and management platform. And it was such a new thing, because at that time, everybody was either building a mobile wallet, or they were building merchant acquisition acceptance platforms, or when it came to cards issuing, really all the incumbents had those legacy sort of solutions infrastructure. And then you were there talking about sort of, open APIs and how can you sort of issue cards and control a lot of things in that. My question to you is that, it's in two parts. One is that how do you get that kind of insight, right? So is it because you did a fintech startup earlier, or how did you do that? How did you have that very kind of, very, very interesting insight that this can become a big company one day? And then secondly, I think in terms of the clarity of thought, right? Like I see a lot of fintech founders struggle in terms of positioning their company. And for a very long time, at least 5 years, we have written many articles on Marqeta. I've always seen this being called as being positioned as a card issuing and management platform, the infrastructure play that you have positioned it as. So those are the two questions that I really wanted to start with.
Yeah, in the beginning, I had this theory that there were all these companies that hadn't been invented yet, where a card was either going to support their core business or be their core business. Sort of the many flavors of Groupon. Solving the problem of how do you put a bunch of Groupons on a card. In the very early days, it's very few ideas are invented at the start that survive over the years, and the very original thing that you wanted to do is what the market finds a fit for. So in the beginning, we very much ate our own dog food. We created the Marqeta card, allowed you to pay in advance for your groceries and get a 7% return. Then we got a call from Facebook, and Facebook said, "Hey, we want to do something called the Facebook card." We're Facebook, we talk to all the issuer processors out there, and they keep talking about you guys. And we were shocked. We were probably 19 people out of Emeryville, California. This is 2012. And we didn't know why anyone was even talking about us. We knew that the original theory and the business that we had and where we're headed, simply because the TAM, the total addressable market of issuing and processing was obviously going up and to the right. There was a lot of talk about cash and checks going out over time. Visa and MasterCard are unique. They're the only networks in the world that have interconnected every merchant in the world, whether online or offline, who take cards. So globalization, e-commerce, that need was going to become significant over time. So that's what we had. We could put a stake in the sand around that and understand that the world was going to be headed in that way. There are n numbers of ways to create a market or a product that you see fit. That first sort of step with Facebook, when we built the Facebook card, we worked with their engineers, we exposed our APIs to them. We really learned an incredible amount, and we found that there's a market here. At the time we had discussed opening up our APIs, but we knew we had to figure out how to operationalize the business. Where did we want to focus in the market? Was it a come one, come all strategy? Was it enterprise, et cetera? So we got that up and running, and then eBay called, and then come 2014, we opened up the APIs. We announced that at Money 2020 in the fall, and the company just took off. We really not only hit product market fit, which is incredibly challenging in and of itself because you need to learn how to scale. We found a real market for what we described as commerce disruptors at the time.
Right. And I think you have built something which in the fintech ecosystem now people call it financial infrastructure API space. It's hugely popular, especially some of the recent M&A that has happened. So that leads me into the next question that, a lot of your customers, such as say DoorDash or Square and many others, right? They have also grown with you over the last 5-7 years, and they have kind of, they are processing a huge volumes of payments. I have seen this in financial services fintech, especially in the enterprise play, that at some point of time, the enterprise starts thinking in terms of a build versus rent or build versus buy kind of a decision. And that puts a lot of pressure on stickiness and, sort of margin pressures and all that. So how have you maintained the stickiness with some of these customers who have grown big along with you? And how do you sort of go ahead maintaining the margins on these?
Well, we have great technology. We invented modern card issuing, which today is a term to describe open APIs for issuing and processing. We were the first company in the world to do that. Back in the early days, we knew that the future was going to be led by engineers, developers, technical product managers, visionary entrepreneurs. There was a real DNA match in regards to what we were creating in the platform that was going to really solve last mile issues, whether it was supporting DoorDash's core business or being the core business of many of our customers. So in the early days, it was about finding that product market fit. Then there is the human aspect of when you support someone's core business or be your core business is how you treat your customers. Making sure they have what they need, giving them tools, features, and automation to help them support their business, watch them grow, bring sort of new tools or inventions to them to help them better support their business. Like back in 2016, when Square came to us and they wanted to add the card to Cash App, we worked with Square and Apple and Visa to bring to market instant issuance. We were the first company in the world to work with Square and have the ability to generate a card and drop it into Apple Pay and then Google Pay. So these are the things where we've grown up with our customers and have serviced them in a way that creates that stickiness, but it's really about a relationship. It's not only hard to build companies, but building a company with a technology that has to be absolute. It has to work all the time. When you swipe a card at the point of sale, or you tap a phone, or you insert a card, or you enter a number online, it always has to work. And the amount of people and resources and know-how to keep that up and running and operating at peak performance, over time, you create trust and a foundational relationship that you watch your customers grow with you. And we've really enjoyed that with them.
Right. And this is a very critical part of their businesses. So, they would rather trust an expert and, somebody they have trusted over a period of time, right?
Yeah, trust is the foundation of every relationship. And in a world where we, again, support the core business, or we are the core business of their customers, trust is the absolute foundation. We do not take that for granted. And we make sure that when our customer calls, or they Slack us or text us or email us, we respond immediately with the best, most informed answer at the time, and treat them the way that they should be treated, which is, we are there for them and we're their infrastructure. So it's important for us that we're supporting them in the best way possible.
Right. And, Marqeta has always talked about being a very developer-centric card issuing and processing platform. My question is really about, DIY, do-it-yourself kind of a platform, which is, say on the payment gateway side of things. I think it's very well understood that, they are very much DIY. And, but when it comes to card issuing, processing, and management, right, I want to ask, like, where is the industry right now? Have we, versus sort of, deals which are cracked with enterprise sales and, there's a human involvement and all of that, versus completely sort of, developer coming in, using open APIs, all the documentation which is there, no human approach to sort of building things. How far have you moved in card issuing, processing, in DIY perspective?
Yeah, so in 2015, after we had opened up our APIs to the world, it was very much come one, come all. And we found that, when developers, even though we had very well documented APIs, there were a ton of questions. What's a card load? In the early days, you become so sort of indoctrinated into the issuing processing world, the thought of asking the simple question of what's a card load? Well, a card load is when you put money on a card. But in an industry where companies are building these products for their business, they have a lot of questions. Not necessarily about the APIs. We get those questions as well. We still get those questions today, even though the API is incredibly well documented. But regulatory. What does it mean to deal with either KYB, know your business, or KYC, know your customer? What are sort of Fincen limits? There's a lot of questions around bringing these sort of complex products to market, regardless of the flavor, whether it's a virtual card, tokenized card, or a physical card. So there's the aspect that we had in the beginning, which I think is a bit of a false pretense, that you can have very well documented APIs and you can go build in those APIs without interaction. But there happens to be a ton of questions around how these products are built. And it's fundamentally different than the acquiring side. The acquiring side is the acceptance of cards. You can add 4 lines of code to your website and be up and running in a matter of minutes. When you're building card products, it's not only technically complex, but really navigating the regulatory and compliance side, creating PCI compliant widgets, things like this that most companies aren't really thinking about. They're only trying to solve a problem. Creates really a whole other community of bringing these products to market, whether it's here inside of Marqeta or outside of Marqeta.
Right. Aditya?
Yeah, sorry, we were kind of trying to tag team here to ask you questions. I want to shift the topic a little bit here, Jason, and talk about you as a founder, you as a CEO. We had a great conversation with Matt Harris a couple of weeks ago. We have another series going on where we talk to VCs, and from that perspective, and we went deep into the VC founder relationship. What's the ideal relationship? When you see yourself having done this before, going from founder to CEO and beyond, is there like one critical secret sauce in there as a founder and CEO that you think works for you? Because you have to deal with so many different things in any given day, week, month. What is that one thing that you think you can share?
It's trust. I mean, trust is the foundation of any relationship, whether they're your investor or whether they're your employee or business partner. They're all business partners to me. So I think, there's sort of mentality as an entrepreneur that, you hear a lot about, which is, VCs are here to bring you suitcases full of money, but I'm going to, run the company the way I want to run it. But the fact of the matter is that your investors have a fixed number of investments they can make over their lifetime. Maybe 25 would be a lot, maybe something a little bit above that. They have a vested interest in your success. Some investors are more difficult than others. Some are more hands-off, some are more hands-on. But I think of them like my business partners. They have a vested interest in my success. If I'm successful, they're successful. And they need to be seen as someone who is, just like someone who is, interested in your success as much as your executive team or business partners or employees across the company and your customers. So I've always treated them that way. I am good friends with all of my investors. I talk to them on a regular basis. I get their insights and thoughts on things. I don't necessarily take their advice all the time. Sometimes I do. Sometimes, a lot of entrepreneurs, we think we're smarter than everybody else. But the fact of the matter is that having insight from people inside and outside the company is just incredibly helpful as you shape. You have to remain steadfast to your vision. You have to remain steadfast in regards to the things that you want to do. But, when things are going great, everyone loves you. When things are going rough, you need to have relationships with people. You need to build that trust over time so that they're in it with you. They're helping you navigate through it. And we had those days. We had those days early in 2015, where we almost ran out of money. But we had great investors and business partners who really cared about where we were headed and, kept my head in the game with regards to the things that we had to accomplish. And now that's 5 years past. We're a $4.3 billion company now. We have close to 450 employees. We operate in the US, Canada, Europe, Asia, now heading into South America, Latin America. I couldn't do that without great business partners, great investors, and a foundation of trust.
You mentioned this a couple of times in your answer, help, partnership. As a leader, when do you ask for help? When do you give homework to your board members? When do you give them an action item, which is like, help me? Is that, and a good leader obviously knows that asking for help is not a sign of weakness, but how do you decide when to ask for help? How do you know?
It's not, there are probably a lot of times that I needed to ask for help and I didn't. In some ways, asking for help, for me personally, I've seen it as a sign of weakness. I want to power through it myself. I probably ask my wife for more help than really anybody else. She also is a psychotherapist, so I typically step in her office multiple times a week.
Is that a good thing or a bad thing that she's a psychotherapist, Jason?
No, she's really good. And she's been through 3 companies with me. So, she's seen all the ups and downs and she's great to help me navigate through things. So, asking for help, it happens in multiple ways. You can ask your business partners, your executive team, your investors, your customers. Some of it is help to get things done and some of it's help to give you good perspective. In the early days, you're actually pretty immature when you start a company. You are very sort of focused on your vision, the things that you want to get done. It becomes sometimes there's a fight, sometimes it's I'm right or they're right, and then as time goes on, you recognize back to that everybody has a vested interest in the success of the company, and asking for help is really about seeing people step up and step through and go to get things done. You're really in it together. So in the early days, it's very difficult to ask for help. That is absolutely, and I saw it as a sign of weakness. But as time goes on and you recognize that everybody has a vested interest in not only your personal success, but professional success and the success of the company, you find that you end up asking for help all the time. Part of it is getting an executive coach. I've had an executive coach for, I think, 2 or 3 years now. She helped me a lot, understanding how you think success is infinite. And then when you see that success is, in some ways, it's a series of successes, but a series of mistakes. You just, over time, you make less mistakes and you have more success. A coach really helps you become a better CEO, a better leader, a better person. And very much you cannot be a professional athlete without a coach. And that's helped me to get to where I am today and get past the I need help as seen as a sign of weakness.
So there's a question, Jason, from the audience. Somebody's asking, Yogesh is asking that, have you ever seen time when as a startup, you are fully ready with your product, but struggling to find the customers and VC funding? What was your strategy to keep team motivated from work and financial perspective? How did you manage that time frame?
So in the early days, when you're raising money, you're going to get a lot of no. And the one thing you have to always remember about when you're going out and raising capital or recruiting is 90% of raising capital is actually psychological. You have to convince people that your vision is going to make them successful, whether it's an employee or an investor. You have to truly believe in, and I mean believe from your heart. And when you talk about your business, you talk about it in the context of where it's headed, what it's accomplished, the signs of the market, why the market is going to come to you versus some other model. And you really need to talk about it in a way where it absolutely comes from your heart. You need to convince people to part with their money when you're one of thousands of people asking the same question is, will you invest in my business? And again, an investor, in a well-known VC is going to maybe make 25 investments in their lifetime. They can probably manage 10 investments, frankly, while they're seeing sort of all this influx. And it's really psychological. You have to really become focused on what's most important about your product. You need to talk about product market fit. You need to talk about the milestones that you've achieved. You need to convince people about where you're headed. They can either join you on the ride or someone else is going to, and they're going to miss out. So I would definitely focus on the psychological aspect. Didier talked about weakness. And when you're hiring, when you're either hiring people or you're raising money, if you show weakness in those discussions, or you're not true to your vision, or you're speaking from your heart, it comes out, and people pick up on that. It's obviously well known that 90% of communication is nonverbal. So when you're meeting with people in person, the intonation of your voice and how you speak, it all comes together in regards to the journey that you're on and convincing people to come along with it.
Thank you, Jason. I'm going to just pick up one more question here from the audience before we wrap. There's a question about the neobanking wave and how Marqeta would adapt to a cardless ecosystem. Any thoughts on that? I mean, do you think we're going to go cardless anytime soon? How do you look at that potential future?
Well, we believe in digital first credentialing. This is the work that we did with Square and Visa and Apple back in the early days of the Square card. The ability to instantly issue. And digital first credentialing it has been in Asia for a long time. I mean, QR codes, or whether it's Alipay or WeChat Pay, across Asia and Southeast Asia, there's a number of wallets. This has been going on for a long time. These are not card first cultures. The US, Europe, parts of Latin America, South America, parts of Asia are card first cultures, where getting a piece of plastic in the mail before you can transact is frankly the first thing that you can do. One thing we've seen through COVID is the digital first credentialing has fast forwarded by 3 or 4 years. So absolutely, I mean, digital first, we're seeing it now. In fact, Marqeta in on-demand delivery alone, we've seen a 20x increase in contactless. We've seen 180% increase in mobile payments. I mean, that is here. We know that viruses live on paper money. We know that people are obviously going to ATMs a lot less. They're wanting to use their phone, whether it's Apple Pay or Android Pay or a contactless card. So absolutely, I think it's a safe bet to think that in the coming years, the digital first and potentially where you won't have a card anymore will be here sooner than you think. The problem is that the payment card ecosystem is a two-sided business. The merchant has to be able to accept Apple Pay or Android Pay or Samsung Pay or a number of wallets. They need to accept contactless cards. And that's the drama around a two-sided business, is you have to have both sides equipped to do digitally first payments. That's obviously going to be sped up here. And there is a time when I believe we'll have no longer plastic. So it's a smart bet to be investing in digital first technologies or digital first credentials for the future.
I'm going to ask you the last question here, Jason, and just keep it a little bit open-ended. I know there's a lot on our minds with COVID, with all that's going on here in the US. We know in the FinTech ecosystem that FinTech is hard. At the same time, I'm an eternal optimist. And I think as entrepreneurs, founders, I think most of us have to be. And because optimism and hope is what drives us to do what we do, is what I believe. But what would be your closing thoughts here? Any advice as you look at your little crystal ball, both for Marqeta, both for your company and the industry? What would be some thoughts that you can share before we close here, Jason, right, for the audience?
Hope is great, but hope isn't a strategy. You have to take action. You have to take action locally. You have to take action nationally, and it starts with you. The interesting part of a human being, and I talk about this in the company a lot, is, I'm on an 80-year plan. I found out early on in my life, I had a father who was very, very tough on me. I had a mother who was an internal optimist and constantly told me, you can do whatever you want to do with your life. You can be whoever you want to be. You can live wherever you want to live. And the combination of those two made me realize that I am solely responsible for my action. And I think early on, that's why I became an entrepreneur. Like, I remember being a little kid and hustling people for money to pick their weeds, shovel their snow. There's something I found incredibly gratifying by doing work and getting something in return for that. Now, doing work and getting something in return for that from a job perspective is one aspect. Acting locally when we found COVID-19 and the restaurants around Oakland were struggling. Within days, we created Oaklanders supporting Oaklanders. We put our own money in. From Marqeta, we had employees put money in, we had friends and business partners put money in, and worked with 3 nonprofit organizations within the city of Oakland to feed less advantaged people, whether it was homeless people or people with drug problems, whether it was immigrant families. You have to take action. In the world today, whether it's COVID-19 or it's the injustices that African Americans have been, it's not just a moment in time. This has been going on for decades and centuries. You have to take action and stand for something that's right. Being a human being is hard. Being a human being of the disenfranchised or people of color is infinitely harder. And it really is about you as a person, about taking an action and what you stand for so that you can make the lives better for other human beings around you. I am very lucky that I've, been in my life, I've been able to create companies and have success. A lot of that is about luck. A lot of it is about the people that you surround yourself with. A lot of it is about being in the right place at the right time. There's absolute skill in there as well, about having a vision and sticking to that, and feeling fait accompli and having fire coming out of your eyeballs, like whatever you're building is going to be a generational business. But it frankly starts with business. It starts with people and what you stand for. And for me, as I've gotten older through 3 different companies, I care a lot more about how people are treated both inside and outside of the company in service to an organization, and that success is not about a single person. It's about a body of people and what they stand for and what they've been able to accomplish.
Jason, thank you so much. I really appreciate you taking the time. I really appreciate you sharing with us what you shared from the heart. And this is the time where we all need that. So I just want to say a big thank you, Jason. Thank you.
Thank you, Jason, and thanks everyone for joining us for FinTech Is Hard series. You have a good day. Thank you.